Hello and welcome back to Author's Note. In the US, shareholders are demanding companies tell them what they plan to do with their large cash piles. On this side of the Atlantic, with Europe just emerging from the depths of recession, that subject has gained less traction. But the reality is that European companies are sitting on unprecedented levels of cash, and they are doing very little with the cash. Capital expenditure is at a 20-year low. With me to discuss this is Karen Olney, who's European Equity Strategist at UBS. Hi. Karen, thank you for coming in. So you've brought in two charts for us to look at the subject. Let's have a look at the first one. So what we've got is net debt as a percentage of equity, and we can see that it's more than a decade low. It will be, according to estimates, this year. So tell me, what's the story behind this?
Well, as you can see, you're absolutely right. Net debt to equity is close to roughly 30%, a little bit above at the moment, and it was almost 60% in 2000. And I think what's made companies nervous is not just the euro crisis, but in 99-2000 we had a big capex boom, the TMT bubble, and then we had the biggest balance sheet recession that I can remember for sort of 30-40 years. And companies vowed in 2001-2002 never to get caught up in a capex binge, to pay down their debt, and capex actually was a bit of a swear word during that period. So I think the memories are still there of what overspending can do to your balance sheet and high debt levels.
And so what this is really telling us is that actually balance sheets in Europe are quite strong.
Very strong. I mean, 30%, if you're around 30% net debt to equity, that's again unusually strong. You have to go back to the sort of 60s and 70s before we had a lot of company debt, before you see those sorts of low levels.
Okay, and so let's go to the next chart, which is showing us we've got capital expenditure as a share of GDP and profits as a share of GDP. And so we see profits are actually moving up, but capital expenditure is seriously low. What's going on here? Why aren't companies spending money?
Yeah, it's at a 20-year low. I mean, one partial reason might be that a lot of capex was going on in other countries like China. But I think the main thing is confidence. So they were burned in 99-2000 when demand just disappeared overnight. They were burned in 2008-2009 when demand disappeared overnight. And now we still don't know if the euro crisis is behind us. So I think management need visibility. They need predictability. And no one wants to be putting a lot of money on the line when we still don't know what fiscal policy is, monetary policy, or whether the euro is going to exist.
So what are sort of a couple drivers that we need to see to sort of push companies to deploy their cash?
I mean, there are about 6 main drivers that are highly correlated to capex. One is capacity utilization and demand. And capacity utilization is still sort of average. It's not very high at the moment, so that's not really going to trigger a lot of capex. Demand is still weak. We need GDP growth in Europe. It's a catch-22 because we need capex growth to give us GDP growth, but we just need a better demand outlook. Business confidence is critical. The IFO's ticking up again. It's much better in the US, so I think business confidence is neutral to a slight positive, but the two winners obviously are profitability and cash on the books. Now those are screaming capex, and we should see more capex if the other drivers improve.
And so just real quick, one last question. How does this compare to US at the moment?
Well, US has actually turned the corner. I mean, the non-defense capital good orders are up. Our economist thinks you're going to get double-digit capital goods growth by next year. And banks are lending a bit more. There's more demand for loan for capital projects. So the US is looking stronger than Europe, and I think the crisis and GDP growth clearly are what's causing that.
Okay, thank you very much. So while we're starting to see recovery in the US, it's clear that amid wider uncertainty about the Eurozone crisis, European companies are still not quite ready to deploy their cash.